So the United States and China are embarked on a massive struggle for power, global superpower, and dominance. And that's caused the trade war to impact every country in the world, every company in the world, and every consumer in the world. There's inflation in the United States, there's deflation in China, and it's all because the United States and China can't get along. Now, one of the biggest problems is that Trump started this trade war in 2018. A lot of people in the United States are rewriting history and saying that China started attacking the United States in the last week or two by putting on export controls of refined rare earth. But that's just not true. The reality is, over the last 7 or 8 years, under President Trump and President Biden, the United States has done all that it can to contain China's economic rise and destabilize its political system under the CPC. Now, here's one of the problems. Trump and Scotty Bessent, the Treasury Secretary, are underestimating China's power. The Americans believe that they have the upper hand and that they have all the cards. But here's the reality. China has the upper hand in the trade war right now. Anything that the United States can make, the Chinese can make on their own, or they can buy from other countries. So instead of buying American soybeans, they're now buying soybeans from Brazil and even Argentina. Instead of buying American beef, they're now buying beef from Australia. Instead of buying oil from America, they're now buying oil from Canada. And importantly, over the last 7 years, China has spent hundreds of billions of dollars of building up its own indigenous innovation in semiconductors. So right now, the United States is overplaying its hand. China has the upper hand. They have all the cards. Let's just look at what's happened to American industry. President Biden and President Trump have shot America's technology sector in the foot. Jensen Huang, the founder of NVIDIA, last week said that NVIDIA once had a 95% market share in China. Now, 0%. NVIDIA has lost 17 billion US dollars a year in revenue in China because of the policies of the Trump regime. This is a huge mistake for the United States because, again, they're underestimating China's willingness to eat bitter, China's willingness to push back, and China's ability to build up trade alliances and political alliances with the global South, or I like to prefer to call the global majority. So Scotty Bessent, the Treasury Secretary for the United States, who's leading the negotiations for Trump against the Chinese during the trade war, has overplayed his hand, and he's making a big mistake on China, and he's underestimating not only China's resolve, but China's power. And this is a problem that Scotty has had for over 10 years. I actually used to advise him on his China investment strategy 10, 12 years ago when he was still at Soros Capital. And I used to tell Scotty that Chinese consumers were starting to gain a lot of wealth. They were getting 10, 20% salary increases, and the real estate sector was high. Now, it's not doing well right now, but this is way back in 2012, 2013. And I told Scotty that he should be backing companies like Louis Vuitton, like Nike, which were capturing the rising middle class. And Scotty said to me, Shaun, I just don't believe it. China is a communist nation, and by definition, communist nations fail. I don't believe any of the numbers, the retail sales or the profit numbers or any of the numbers coming out from the government, because it's communist. And I think the problem that Scotty has is he's blinded by ideological bigotry of just hating communism and disliking China. And I think that has not played well for him as he tries to negotiate with the Chinese side, because he's overestimating his power. Now, for instance, he always says that America is the biggest buyer of Chinese goods. Thus, because America's the buyer, the Chinese have to prostrate themselves and kneel down. Essentially, he's saying the customer is always right. But here's the mistake. In 2017, 2018, when Trump first launched the trade wars against China, it was true. China was not very well prepared. 17% of their exports went to the United States. But over the last 7 to 8 years, China has actually been de-risking from America. China has started building up trade patterns with the Middle East, Africa, Southeast Asia. Right now, 18% of China's exports goes to ASEAN, while only 12% of exports go to the United States. It counts only for about 2.2% of overall GDP. So actually, exports or sales to the US are not that important to China's overall economic well being. If you go into a place like Singapore, BYD, the Chinese NEV automaker, has actually replaced Toyota and BMW as the biggest seller of autos in Singapore. So Chinese companies are going abroad and forging new trade patterns because China has smartly de-risked from the United States over the last 7 or 8 years. Conversely, America, frankly, has not de-risked from China. Over 95% of antibiotics and ibuprofen that Americans consume still comes from China. And very importantly, rare earths. Rare earths power the world's 7 trillion US dollar global economy. It's rare earths that has gotten the Americans mad in the last several weeks because China has put on export controls on rare earths to retaliate against America's never ending export controls on semiconductors, sanctions on Chinese companies, and now fees on Chinese ships that go into American ports. But here's the thing about rare earths, and this again is why China has the upper hand in the trade war. About 85% of the world's rare earths come from China. China refines about 99% of high-end rare earths. Now, here's the thing. Rare earths themselves are actually not that rare, despite the name rare earths. You can find the actual rare earths in Brazil, in iron ore mines, or in tailings. You can find it in Saudi Arabia, in Australia, in Russia, China, and actually, you can even find it in the United States. But the key is that over the last 40 years, China has come to dominate not just mining, but the refining of rare earths. The United States is 5 to 10 years behind China when it comes to refining rare earths. It's going to take America probably a decade and billions, if not hundreds of billions of dollars to catch up to the Chinese in terms of their technological know-how in rare earth refining. The combination of China's strength in rare earths and in Scotty Bessent's underestimation of China has given the United States a weakened hand, which is why you've seen Trump say, one day I'm going to slap an additional 100% tariffs on Chinese products, to the next day saying, well, 100% tariffs is not sustainable, to the next day saying he's a great friend of Xi Jinping and Xi Jinping's life is like a movie. It's clear that Trump wants to exert pressure on China, but when he's confronted with the cards that China has the upper hand, and Scotty Bessent is either willfully ignoring the strength of China or he's delusional. And I think this has led Scotty Bessent to lash out and be fairly unprofessional when it comes to talking about China. He called Li Changgang, who was the lead trade negotiator for the Chinese to the WTO, as an unimportant person. You can see that Li Changgang has gotten under the skin of Scotty Bessent. Scotty Bessent clearly has a temper. Got mad at Li Changgang, rumors that he got into a fist fight with Elon Musk. I don't know what's true or not. I haven't spoken to anybody in the White House, but it's clear that Scotty is not the calm, rational type of person that America needs to be leading negotiations with China in such an important time, especially again, when China has the upper hand. I was very critical of the United States for slapping export controls and sanctions on the Chinese semiconductor sector. It was a mistake because when America limited high-end technology transfer, especially of NVIDIA chips, to China, that got Chinese scared. The government, the private sector realized they needed to coalesce and work together to build up indigenous innovation. Before that, in 2014, 2015, most Chinese tech companies like an Alibaba, like a Tencent, were completely fine with buying American technology and just focusing on figuring out how to sell more Nike shoes or Apple iPhones on Taobao and make money that way. That was low hanging fruit. They didn't want to invest the billions or hundreds of billions necessary to invent and build up indigenous innovation. But it was really because Trump and then Biden put on so many sanctions and export controls on China that Chinese companies and the government realized we need to build up an indigenous innovation sector in China. And that's why in Q3 of 2025, Chinese have bought zero H2O NVIDIA semiconductor chips. The Chinese don't want and don't need American technology anymore because over the last 7 years, China has built up its homegrown semiconductor sector with companies like Cabricon, Huahong, SMIC. And these companies now are able to sell to the entire world, to the global majority. One of the problems that American technology companies is facing is that because Biden and Trump weaponized SWIFT, weaponized the US dollar, and weaponized technology, you see a lot of other countries in Southeast Asia that are also now scared to buy technology from the United States in case the US puts them in their crosshairs and also bans the export of technology to them. So, for example, Malaysia spent 5 billion US dollars trying to become a data center hub. But then the United States banned the export of high-end NVIDIA chips to them. Thus, Malaysia was never able to realize the investment gains from trying to set up a data center hub in Malaysia. So it was a mistake for the United States to weaponize technology. It's hurt American companies. It's hurt the ability for America to control tech standards for the world. And it's given rise to Chinese indigenous innovation. However, similarly, I think that there was a mistake from China to threaten to put export bans on all of their rare earth to all countries a couple weeks ago. The rest of the world was concerned about China having this monopoly, but they always felt that at the end of the day, the Chinese would be pragmatic and would sell them rare earth. Now, because they've threatened, a lot of companies and countries are starting to realize they need to build up their own homegrown rare earth refineries in the same way that 7 years ago, the Chinese realized they need to support the semiconductor sector. So you're seeing countries from Vietnam to the UK to Australia to the United States saying we need to now invest into rare earths because we need to de-risk from China. And I think that was a mistake for China to play this card so soon because, frankly, in the trade war, China has more cards to play. They have cards to play such as good relations with the global majority. They have cards to play with shifting trade patterns into Brazil and Argentina. In Q3 of this year, Chinese have bought zero American soybeans. Previously, Chinese were the biggest buyers of soybeans from the United States, spending 7 to 10 billion US dollars a year. If I were advising China's government, I would have told them, let's dangle the willingness to buy more soybeans in front of negotiators with American, use carrots to try to get them to come to a trade deal between Scotty Bessent and Vice Premier He Lifeng. I would not have used the rare earth card so early and so soon in the negotiations because of the unintended consequences it's going to have. It's clear over the next decade, you're going to see billions and billions of dollars invested globally into the rare earth sector, which could chip away at China's almost monopoly on rare earth refining at the premium end. I am very bearish about America's economy in the coming 6 to 12 months. I'm worried about the risk of stagflation hitting America's shores. So I just spent 2 months in the United States and was shocked at how high inflation was. The average car in the United States now sells for over 50,000 US dollars. Because of Trump's tariffs, a lot of companies bought a lot of product from China before the tariffs took effect. And so they had stockpiled months and months worth of products into their factories. And they also haven't started transferring the high priced goods to consumers in the United States. But what we're starting to see in the last couple of weeks is that American companies can't afford it anymore. So some of them are accepting squeeze margins, and that's probably going to account for 20% of the tariff costs. But the reality is they're going to transfer about 50% of the tariff costs to the end American consumer. And that number will count for over 1 trillion US dollars in the United States over the next year. So this is causing rampant inflation in the United States. The second problem with this trade war is American companies don't know where to invest. One day they want to invest in China, but they're worried that the United States will slap tariffs. So you saw companies like Apple over the last 2, 3 years have been relocating or moving large parts of their supply chain to India because they've felt that India and China were not close, but India and the United States were. But you've seen in the last 6 weeks that Trump slapped 50% tariffs on India, which are even higher than the tariffs that he slapped on China. So the problem right now is American businesses, really businesses all over the world, don't know where to invest their money because one man changes his mind from day to day. You can't invest $5 billion, $10 billion into setting up a manufacturing plant somewhere, or you can't spend billions trying to sell into another country because you're just not sure about what the United States and what President Trump is going to do or post on social media, which could total wreak havoc on the best laid plans. China's economy was weak before the early 2000s, late 1990s. And a large part of that was interventionism. There wasn't very clear decision making and policies. And that really hurt China's economy in the 1960s, 1970s, and 1980s. By the time Zhu Rongji became premier and Jiang Zemin became chairman of the CPC, they worked together to create steady, stable, long-term economic plans that businesses could trust and invest in. And it's because they did that, because they stopped intervening in the state, in state-owned enterprises, and in the economy, that China's economy has blossomed and boomed over the last 25 years. Trump, on the other hand, is making a lot of the same mistakes that China did in the 60s and 70s. He's now taking stakes in private American companies. He's trying to take stakes in Chinese companies and actually grab them, like he's doing with TikTok, where there's rumors his 19-year-old son, Barron Trump, is going to go on the board of directors. So he's doing intervention into the economy, and he's not having a steady, clear policymaking process, which is causing havoc on American businesses on determining where to invest. And eventually, that's going to cause problems for America's economy because even though the stock market has done reasonably well in 2025, even though GDP has grown 3.8%, the labor markets are terrible because American companies aren't willing to hire American workers because they're just not sure what policy or what tweet President Trump might issue at 3 a.m. in the morning. And then finally, for investors, for mutual funds and hedge funds, narcissistic, unclear decision making, almost infantile like behavior of President Trump is causing them to throw out all fundamental analysis when investing in companies. Instead of looking at revenue, instead of looking at profits or return on equity or future growth plans over the next several quarters, investors are saying, well, what do we think Trump is going to do next? Who does he support? Does he like Jensen Huang at NVIDIA? Does he like the Miriam Adelson at Sands? Is he going to launch a trade war, take off a trade war against China? It's creating a lot of volatility. And again, people are no longer in the investment community looking at fundamentals to decide where to invest. They're looking at the whims of one man. And that's very dangerous for an economy. We are reaching a late 1930s like situation where we have a lack of checks and balances in the American political system, where we have geopolitical tension with other countries, and where the United States, it's losing its prestige amongst the rest of the world, even among our partners and allies. and where the United States is sitting on $37 trillion of debt. When you have this much debt, this much geopolitical stress, and so much polarization between the Democrats and the Republicans, this does not bode well for the stability of America's economy and the standing of America in world affairs. And that's why gold has crossed 4,000 US dollars per gram, because nobody trusts what Trump is going to do. And so they're so scared about putting into equities, into real estate, or into the US dollar, they're no longer buying treasury bills and they're putting money into gold. China, since 2017, has reduced their amount of US dollar holdings from 1.4 trillion to about 700 billion, and they've now become one of the biggest holders of gold globally. Trump is causing not just frustration, not just anxiety globally, but he's actually starting to impoverish a lot of good people, not just in China, not just in Europe, but in the United States, because he's mad hungry for power for himself, and he's not looking after the needs of everyday Americans. Now, I didn't agree with all presidents before. I disagreed with George Bush when he invaded Iraq. I didn't like what Obama did on everything politically. And I certainly didn't like Biden and his moves on DEI um, and equity versus equality. But at the end of the day, I felt that those presidents were all doing what they thought was best for the United States. When it comes to President Trump, to me, it's very clear he's doing what's best, what he thinks is best for he himself and his family, and not looking after the needs of the American people.